I am not particularly concerned about an economic collapse, as I already have a good idea of what's going to happen, even though I cannot predict the exact timing. While many people seek precise timing, only the ultra-wealthy individuals could have access to such information. My concern, however, is that people may not take action quickly enough, and they will continue to suffer from financial exploitation for an extended period until they become impoverished. Hyperinflation is deeply ingrained in Germany's cultural consciousness, with the Weimar era being the most famous example. While other countries have experienced hyperinflation, Germany's cultural memory of it is particularly significant in shaping its behavior under such circumstances. Hyperinflation differs qualitatively from regular price increases, as it creates a sense of urgency and panic among people to spend their money immediately, leading to a collective behavior where everyone tries to get rid of their money at the same time. This collective behavior renders the central bank's efforts to control the inflation ineffective, as individuals will not heed interest rate hikes or other monetary policy measures once the panic has set in. To put it simply, hyperinflation changes the way an entire nation behaves. Once money is in the banks, it can be controlled because the banks and central bank work together to regulate it. However, once money is in the hands of the public, control becomes more difficult. Germany's cultural memory, passed down from previous generations and possibly taught in public schools, has instilled the idea that when such a situation arises, money should be quickly disposed of. This may lead to Germany being the first to take action, although it remains to be seen whether this will happen. Perhaps there is a possibility of discovering another unfamiliar nation in the future, such as Lithuania or some other place. However, considering their current energy crisis, it is reasonable to expect that Germany would be the first to recover. They have been severely affected by the gas shortage, leaving them exhausted. Nonetheless, they share the same currency and have a collective cultural memory as their neighboring nations. Once hyperinflation of the euro starts in Germany, it is likely that other countries using the currency will follow suit, although this may take some time. In the past, such as during the Weimar Republic, hyperinflation was limited to a single country using its own currency. However, now that the euro is used by a larger region, the effects may spread from one location to another, like the spread of a cure rather than an infection. Regarding the silver market, the current situation differs from that of 2008 or 2011 due to the existence of a silver futures market that allows the selling of more paper than physical silver, which some consider to be manipulation. This is true for any futures market, whether it's gas, coal, or any other commodity. Short squeezes can occur in these markets, such as with nickel, gas, or natural gas. This happens because there's more trading based on paper contracts than on actual physical supply. This phenomenon also occurs in the precious metals market, as was evident in 2011 when the price of silver rapidly rose to $50. At that time, the physical premiums were actually negative, meaning it was cheaper to buy a physical silver coin than to buy a share of SLV. This indicates that the increase in price was driven by speculation on paper contracts rather than actual demand for physical silver. It was similar to when people would mention the three-letter acronym SLV, even if they didn't understand what it represented, and would then try to follow its upward trend, only to be met with losses. Currently, the premiums for silver are high, as there is a strong demand for physical coins in the market. This trend was not as prevalent in previous years, such as in 2008 or 2011, and may indicate a lack of understanding of the true nature of money. Although there are those who believe in the potential of cryptocurrencies, such as Bitcoin, as an alternative form of currency, I am personally not in that camp. While they may have some valid points, I believe that they are ultimately just another form of derivative money, and therefore unlikely to survive a major financial crisis. Our goal should not be to exploit the average person. I don't communicate with the average person. Instead, I strive to engage with individuals like you who have some grasp of the concept of money but may not fully comprehend it. However, even I don't have a perfect understanding of it. Our aim is to awaken leaders across different countries and communities so that they can accumulate as much wealth as possible. This will enable them to take control when society faces collapse and aid in uplifting people. Our ultimate goal is to prevent a dystopian nightmare and instead create a stable and harmonious society. The leaders we work with share this objective. Our goal is for leaders at every level to possess substantial amounts of real money, giving them significant power to combat any negative influences, particularly those seeking to reintroduce inflation and the Weimar hyperinflation. For instance, foreign exchange students exchanging $100 bills could purchase desirable properties in downtown Berlin, allowing leaders to acquire valuable assets for relatively little money. This accumulation of wealth would strengthen their ability to resist any efforts to destabilize the economy. The announcement was made that an ounce of gold would cost between $20 and $21, which was equivalent to 20/65. Therefore, a $100 bill would amount to approximately 5 ounces of gold. During a financial crisis, central banks and other financial institutions typically pursue gold as a safe haven asset. However, causing the ratio of gold to silver to decline to about 15:1. This ratio was historically the monetary average before silver was demonetized in 1873. When both silver and gold are used as currency, the gold-to-silver ratio generally hovers around 15:1. The product of 5 ounces and 15 equals 75 ounces. However, it is unlikely that this amount of silver will maintain a stable market value. During times of panic, when gold substitutes fail, physical silver becomes necessary to divide gold into smaller amounts. In such circumstances, 75 ounces of silver may be worth the price of a house. This is not a prediction of the end of days, but a logical assessment based on the need for physical coins in times of crisis. For example, the inflationary cycle began before 1971, although it is commonly measured from that year. The admission made suggests an acknowledgement of the presence of inflation, which renders the pretense of gold prices unsustainable. To address this issue, implementing Ron Paul's notion of competing currencies would be beneficial. Private markets often operate more efficiently, and money is essentially just another market, with the most marketable commodity being money. Presently, we utilize inflated substitutes. In the immediate aftermath, gold companies or miners could issue paper certificates to their shareholders, which could then be traded. Goldsmiths and silversmiths would also play a role in the process, with silver being utilized initially. Once you acquire operational gold substitutes, a gold-backed blockchain could potentially be more valuable than paper. It is likely that we will stick to digital transactions, with the blockchain being backed by gold for efficiency. Stockpiling any commodity at present would prove beneficial since people will seek tangible assets when currency loses its value.